Welcome back to our channel where we provide tips and advice on personal finance. Today's video is all about how to protect your cash from inflation. As we all know, inflation is the gradual increase in the cost of living over time. It means that the money you have today will be worth less in the future. But fear not, because in this video we'll be sharing 4 methods that can help you protect your cash from inflation. We encourage you to always do more research before you take action, so that you be 100% conscious of what you are doing. Having said that, let's begin, shall we? Method 1. Invest in inflation-indexed securities. Our first method is to invest in inflation-indexed securities, such as Treasury Inflation-Protected Securities, TIPS. These securities are issued by the U.S. government and their value is adjusted based on the inflation rate. This means that if inflation rises, the value of your investment will increase accordingly. TIPS also pay interest every 6 months, based on their adjusted value. This makes them a great option for investors who want to protect their cash from inflation. But TIPS are not the only option. You can also invest in other types of inflation-protected bonds, such as inflation-linked bonds, which are issued by corporations or foreign governments. These bonds work similarly to TIPS but may have different terms and interest rates. As with any investment, it's important to do your research and consider the risks before investing. Method 2. Diversify your investments. Another way to protect your cash from inflation is to diversify your investments. By investing in a variety of assets, such as stocks, bonds, and real estate, you can spread your risk and reduce the impact of inflation on your portfolio. Different types of investments tend to perform differently in different economic conditions. So, by diversifying your investments, you can benefit from the upside potential of each asset class while minimizing your downside risk. To diversify your investments, you can invest in mutual funds or exchange-traded funds, ETFs, that hold a mix of assets. These funds are professionally managed and offer exposure to a range of asset classes, which can help you achieve a well-diversified portfolio without the need to pick individual stocks or bonds. Method 3. Consider commodities. Our third method is to consider investing in commodities. Commodities, such as gold, silver, and oil, tend to hold their value well during times of inflation. These investments can be purchased directly or through exchange-traded funds, ETFs, that track the price of the commodity. By adding commodities to your portfolio, you can benefit from their diversification potential and hedge against inflation. It's worth noting that investing in commodities can be risky and volatile, as their prices can fluctuate based on global supply and demand factors. Also, commodities may not provide a steady stream of income like other investments such as stocks or bonds. So, before investing in commodities, it's important to weigh the risks and potential benefits. Method 4. Take advantage of high-yield savings accounts. Our final method is to take advantage of high-yield savings accounts. These accounts offer higher interest rates than traditional savings accounts. While the interest rates may not be high enough to completely protect against inflation, they can help your cash keep up with inflation to some extent. By opening a high-yield savings account, you can earn more interest on your cash without taking on additional risk. It's important to note that high-yield savings accounts may come with fees or minimum balance requirements, and their interest rates may be subject to change. So, be sure to read the fine print and compare different account options before opening an account. To summarize, protecting your cash from inflation is crucial to maintaining your purchasing power over time. By investing in inflation-indexed securities, diversifying your investments, considering commodities, taking advantage of high-yield savings accounts, and other similar strategies, you can protect your cash from inflation and maintain your financial stability. It's important to note that every investment comes with risks and it's crucial to do your research before investing your money. However, with the right strategies and a well-diversified portfolio, you can mitigate the effects of inflation and achieve your financial goals. Thank you for watching this video on how to protect your cash from inflation. Don't forget to like and subscribe to our channel for more personal finance tips and advice.